to the LFB and our global video charting review for the equity and ETF markets. This is for the 24th of May 2011. My name's Marco Haig from the LFB Trade Desk. Hope I find you well. We do ask that you pause the video, read the disclaimer and accept that before moving forward. News wires are very quiet in regard to the equity and ETF market fundamentals. We are coming to the end of earnings season for Q1 earnings season, and that will now allow some negativity to feed into the market that wasn't allowed to build whilst the quarter 1 earnings season in equities was being absorbed. And the reason for that is any negativity that might be in the market is very quickly overcome with a positive earnings read. So it's not being negative in the outlook, it's being realistic on market mechanics. Global volume is down, participation in equity markets is down, insider buying to selling is down, redemptions from hedge funds are up, hedge fund returns are down. There's reasons to be realistic about the fact that equities could struggle on the main indices to be able to break yearly highs and hold. In our technical reviews, we're going to look at the near term on the equity markets and just get a look and a feel for where's the momentum, where's the price swings, and where are the areas of note on the US, the European, and the Asian markets. This is the front month futures contract for the S&P. We are in short mode. The candles have turned from blue to white. When they're blue, there's a bullish momentum to the market. When they're white, that means that that momentum has turned a little bit negative. The trend line, bear in mind this is only a 1 hour chart, but the trend line is telling us that we should be favoring the short side from a technical perspective on the S&P. And without that earnings season positivity that could come from main releases, we've just got to favour the fact that this is a sell resistance setup that we've got at this point in time. Going into the Tuesday session, it does show us that 1320 is going to be incredibly important. If you are on a trial period with us and you do want to get access to these charts and this data, we provide this in the daily trade plans that are sent out to you for 20 asset classes, including the S&P, the Nikkei, the DAX, ETFs, the spiders, the Dow Jones, gold, silver, oil, the dollar index, 8 currency pairs. We provide the neutral swing points, the support and resistance areas, the simple moving averages, and we also give you entry, target, and exit areas on all of these asset classes. But just looking in the near term, upside resistance will definitely be at the 20-day simple moving average on the S&P, which is up here at the 1340 area. After the initial movement lower on Sunday, and a lot of traders, if you trade 9 to 5, you would have missed this move. We did put in our client emails a note on Friday that said S&P is going to drop lower from 1330 to 1328, targeting 1323 and then 1315. If you didn't catch that on Friday, we did send out a currency signal on Sunday that covered the moves. If you are a 9 to 5 equity trader, we sent you out on Sunday evening a Aussie dollar short trade that picked up 100 pips. So you didn't have to sit there waiting for the Wall Street Open to watch this price decimation. You could have countered that with a move in a currency pair. At this point in time, since that Sunday movement, we've had nearly 24 hours of sideways trade on the S&P and just not looking at this point in time for too much on the upside. Just got to favour this negative momentum, but it's going to be difficult for the market to get this lower without a real good reason. We do need a breaking headline to start to push things lower on S&P. Another stock that we highlighted on Friday's client note was Microsoft, and we're said on Microsoft that we're looking for a move lower from the 2440 area that targets 2390. We didn't get all the way down to 2390, but we have got down on a low on Microsoft with the gap lower to 2403. If you are on the short side of Microsoft, it's not going anywhere at this point in time now. The initial move and the initial targets were hit. Target 2, now just floating around waiting to see what momentum hits the S&P market. If you are in this looking for target 2, obviously you've closed out your target 1 area. You might just want to pull everything tight and see if we can get another drop. If not, keep yourself in profit. Looking at the German DAX, we're running into a wall of resistance that was support. It wasn't good support, but at the 50-day and the 100-day simple moving average, which is also our support 1 area on trade today at 71.70. You've got the 100-day and the 50-day and a support 1 area. All of them got broken. That's a very strong signal that 71.90 is now going to be very, very, very difficult for the German DAX to move higher through. We do have an ABC pattern here, A, B, C, that has completed. We did put signals out in the client notes highlighting the fact that the path of least resistance on the German DAX did look to be lower, but it's ironic that it's only when the German DAX goes lower that the European debt issues are spoken about. When the German DAX goes higher, those exact same issues are suddenly accepted as just part and parcel of what's going on. Sentiment, momentum really are very, very, very important when you're trading in such low volume environments. It will be difficult for US traders to see the S&P break higher above 1340 if European trade cannot get the German DAX to close this week above 7200, and that's going to be a Herculean task. Part of least resistance does look to be short on the equity indices. Japanese Nikkei already taken out most of the daily chart simple moving average areas. The 200-day, the 20-day, the 50-day already gone. Looking now at a very, very weak looking set of Japanese Nikkei equity charts at this point in time. And these will drift lower if those US and European equity markets cannot move high. If you can't get the S&P up above that 1340, can't get the German DAX above 7250, the Nikkei may go sub 9,000 over the course of this last week of May if we get some negative headlines. This ABC down structure, A, B, C, still does look as though it's got the ability to get down to test 9300, but technical reads really do need some fundamental pushes, and at this point in time wouldn't touch the Japanese Nikkei at all. Looking at the US based exchange traded fund EEM, Echo Michael, which is the emerging markets ETF, looks very much the same as the Japanese Nikkei. If you're short on this, you've got to be very careful now because you are at the 200-day simple moving average down here at the 46 area. Took out the 100-day, took out the 50-day, took out the 20-day as if they weren't there. We did trade around them for a little while, but now they're gone. They're going to be huge upside resistance at 47. We will get some probably bounces off this 20-day simple moving average in tests of support, but if we do break lower below 45.50, it does look as though we got a test of 42 going on the exchange traded fund EEM, the emerging markets. Well, that wraps up our review of the global equity indice and some individual stock and exchange traded fund looks. Be careful being on the long side of anything equity based at this point in time. Even if you're a long-term trader, there are some times that you need to be looking at possibly banking some profit and just realigning your thought process, because we could have that sell in May and go away, don't come back till St Swithin's Day in play. But just be a little bit careful. If you do need further enhancements to your website services or your memberships, then you can visit the services area on the LFB website, and from there you can pick up the subscription and membership example page. Thank you very much for making the LFB an integral part of your trading day.